What's up, everybody, and welcome back to Money Central. I hope everyone is having a great day as always. I get asked all the time, what is the stock market? So I decided today I'm going to make a video going over step by step how to start investing and what the stock market is. All I ask is that you smash that like button and subscribe so you never miss out on a new video. And I know this may seem a little silly, but we're going to start off with the most simple question. What is a stock? And I know it might seem really basic and like, oh, I already know that, and that's great. But I want everyone to finish this video knowing exactly what is a stock and what does it do. A stock is a share in the ownership of a company, including a claim on their assets and earnings. So in simple terms, you basically own a small fraction of the company that you decided to invest in. So a company must be publicly traded on the stock market in order for you to invest in their company publicly on a brokerage account. This includes stocks like Tesla, Apple, and while some companies are private companies, you can't invest in those companies on the public stock market, and this includes companies like Publix and Fidelity. Now that you know what a stock is, I have a question for you. Have you ever looked at a stock chart and just been utterly confused? It's alright, me too. I'm here to break down what all those flashing numbers and colors mean on the screen. Today, whenever I need to refer to a stock, I'm always going to refer to Apple. This way we're all on the same page and it keep the numbers the same. So typically on any type of brokerage account, the big number on the screen that you see is going to be the price of the stock. And that price is going to equal one share of that company. So what is a share? Basically, every company is going to have a total number of outstanding shares. And this is the total number of shares that can be traded for that stock. For example, Apple has 15.82 billion shares outstanding. Now, that means you could go buy 15.82 billion shares, but unfortunately, I don't think anyone in this world has that money, not even Elon Musk. And so if you take that total number of shares outstanding that we just talked about, that 15.82 billion, and you multiply it by a stock price, we'll just say Apple's stock price is about $160 right now. If you multiply those two numbers together, that will give you the market cap of Apple. And that's basically going to be how much Apple is currently worth. Now that we all know what a stock is, let's go to that term that we've all heard before. Buy low, sell high. And this is basically what you're going to want to do in the stock market 99% of the time. Now I say 99% of the time because you can also make money on betting on the stock market going down. But we'll get into that in another video because I want to keep it as simple as possible for you guys today. Now let's get into the three types of trading that investors use. 1, we have day trading. 2, we have swing trading. And 3, we have long-term investing. Day trading is going to be when you buy a stock on a single day, like today, and you sell it that same exact day before the market closes. Now, have you ever heard of that pesky little rule called the pattern day trading rule, aka the PDT rule? Well, this rule states that you can only make 3 day trades in a rolling 5-day period if your account balance is underneath $25,000. Now, if you're new to this term, you may be asking, okay, what if I have more than $25,000 in my account? Then you're able to day trade as many times as you'd like, as freely as you'd like, as long as your account balance stays above $25,000 at all times. I know. The rule sucks, but we must abide by the law and what they tell us to do. Now, swing trading. Swing trading is going to be when we buy a stock one day and we hold it overnight for at least one night, or maybe even 3 nights, and sometimes it might even be 5+ nights. Next, we have long-term investing. And this is going to be more investing and not really trading. Investing is going to be when you buy a stock and you hold it for at least a year or more. Some people hold it for 40 years, 50 years. It depends on how you want to trade and what your money goals are with investing. Now that we've gone over the 3 different types of trading, we can now dive into what you need to do when you're ready to buy your first stock in the stock market. The first thing you're going to need to do is go in and sign up for a brokerage account with a company. Now, my 3 favorite companies to trade with are TD Ameritrade, also known as Thinkorswim, E-Trade, and Webull. In my opinion, these 3 companies have the most diversity when it comes to trading stocks in the stock market. Fidelity is also a really good company, but to me, they're more for long-term investing. So if that's your goal, that would be another company to look into. So once you've chosen your company and you've opened your brokerage account, and you've put cash into that account. Now you're ready to start buying and selling stocks, and this is the fun part. In the future, I'm going to go over how to find the correct stocks for whatever trading method you're using. So be sure to subscribe so you don't miss out on that video. So you're going to open up your trading screen and you're going to see that big number that we talked about earlier, the stock price, but you're also going to see two other smaller numbers. And one of them is going to say bid and one of them is going to say ask. The bid price is going to be the highest price someone is willing to pay at that exact moment for that stock. While on the other end, the ask price is going to be the lowest price someone is willing to sell at that current time. So the first thing you're going to have to do when trying to buy a stock is you're going to have to create an order. Now there's two types of orders I like to use. There's a couple others, but the two best I've found to work out for me over the last 5-6 years have been limit orders and market orders. Now I'm going to explain what those mean in just a minute. So think of a market order as basically you're asking your brokerage to fill you in at the next available price on the stock market. Limit orders are basically the opposite of a market order. You're going to come in and tell your broker basically, hey, I want to buy this stock, let's just say it's Apple, but I don't want to buy it at the current price. I want to wait for it to drop maybe 30 cents. So your limit order is going to be 30 cents below the current price of the stock. And if the stock eventually dips down to that price and someone is willing to sell their shares to you at that price, then your order will be filled and you'll have the stock at the price you asked for. So the next step is going to be deciding how many shares do you want to purchase of this stock. So let's just say you have Apple and the current price is $160 like we said earlier. And you have $500 to invest. You're going to be able to get 3 shares of this company for $480 in total. Now, unfortunately, I know some people look at cryptocurrency and you can buy fractional shares of Bitcoin or Ethereum and all that. Well, that's not the stock market. In the stock market, unfortunately, you can't really buy fractional shares. It's not possible. So once you've picked your order type and how many shares you'd like to purchase, it's then time to place your order. After you've placed your first order, now you can sit back and watch your money grow. Congratulations, you just purchased your first stock. Now you can sit back and watch your money grow. Now, when you place your order, you can then go into another tab depending on whatever broker you're using, and they'll have a tab where you can see your pay loss and your pay loss percentage, and you can see all those amazing things right there in your broker. I see so many people lose money in the stock market just because they get greedy. They were up 20%, 30%, or 5%. And they were like, I want more, I want more. Do not make this mistake. When you are happy with your profits, be sure to sell your stock just in the same way I just explained it, except you're going to click sell and not buy. Now let's talk about what happens after you sell a stock. After you sell a stock, you are either going to have to wait 2-3 business days depending on your broker, or the money will settle right away and you can trade again. This is all going to depend on if you're using a margin account or a cash account. A margin account is basically an account that allows you to buy and sell right away without having to wait for your cash to settle. Now you're also restricted to the PDT rule when using a margin account. Now if you decide to use a cash account, the PDT rule does not apply to you, but now you have to wait for your stocks to settle 2 days, 3 days, depending on your broker. Now we'll get into options in another video, so be sure to hit that subscribe button so you don't miss out. Options settle the next day, so you could do 5 option trades in 1 week. But yeah, I hope you enjoyed this video and now you have a clear understanding of what a stock is and how to place your first trade and how to start investing in the stock market. Investing in the stock market can be a very tricky thing for a lot of people, and I'm here to help you learn how to do it step by step as easily as you can. So if you have any questions, put them in the comments and I will be sure to get back to you as quick as possible. I hope everyone has a great rest of your day, and be sure to hit that subscribe button so you don't miss out on any future videos. It really helps me out a lot. I'm going to keep coming out with great videos for you guys, and so that we can keep learning how to invest our money the correct way and safely. Have a great day, everyone. Peace out.